Looking at crypto specifically now, could you tell us more why they have become more mainstream? And do you have any recent observations from the volatility caused by the coronavirus shocks being seen by all the financial markets?
Yeah, I think really I started to touch upon that in the answer to your last question, in that volatility is where lots of people were making money originally, but the volatility was also something that made them less of a normal investment asset class. So the wild swings on the markets on a literal day-by-day basis was something that could be taken advantage of if you knew what you were doing, but nevertheless made it potentially higher risk also. As the currencies, Bitcoin and the other large currencies, have matured, that volatility has reduced. So they have become still more volatile, still more, there is still a greater ability to make money from cryptocurrencies than from many other asset classes, but nevertheless the volatility has settled down more. And as that process has happened, that is one of the main reasons why the investment funds that I was mentioning, so Fidelity or the Swiss banks or a whole range of other ones have mentioned, that is why they are now starting to promote the fact that their clients, their wealthy clients, should have funds held in these currencies, because they do have the ability to provide much higher returns than many other asset classes. So that's one of the reasons. But I've always felt that, for me, one of the real strong benefits that cryptocurrencies have is the fact that I've always felt they should be decoupled from almost every other asset class. And what I mean by that is, in a recession, when the music stops, as it were, and the world economy slows down, most of the other asset classes are linked in one form or another. The price of oil goes down, and other commodities goes down, etc., etc., and they're all linked, and they vary to degree for the level that they rise or fall, but nevertheless they are linked. And I have always believed that cryptocurrencies are not linked in that same way to any other currency. So for me, it was particularly interesting in March or so, when the whole coronavirus economy situation started to happen, because what did happen is, for the first few days after the stock market crash, when everything, or crashes around the world, when everything else started to slow down, cryptocurrencies also started to come down. But very, very quickly they stopped, and they were indeed proven not to be coupled to all the other commodities, all the other stock markets in the same way. So I was pleased to say that I do feel that I was proven correct in that they're decoupled, as I've said, from other asset classes. So that in itself is a very, very good reason why you should have them in your portfolio. It is a hedge against coronavirus coming back, or trade war between China and the US, or whatever else it happens to be that affects stock markets, commodity markets worldwide. It does seem that cryptocurrencies aren't affected in the same way. So I think that's been a powerful learning curve, and a good reason why they should be held. And again, as they become more acceptable, as more fund managers are telling people that they should hold them in their investment portfolios, in their pensions, again, there will be a sort of a growing demand for them as they become more acceptable, and so therefore that should, again, hopefully drive the price.